Yo, what is going on, guys? In this video, I'm going to be going over a strategy that helped me to stay profitable, and it might not be what you think. I will also go over a little bit about the basics of my actual trading strategy and entry model, as I do in pretty much every single video, just for the new viewers. But primarily something that a lot of people don't talk about because it's not as sexy or seen or praised in the trading community as much as it should, really. And that is the actual trading strategy, not an entry model that helps to stay profitable. A lot of people don't consider rules and consistent risk a strategy, but it really is because pretty much everybody does it differently. And this is the one that I use, and I'm going to break down for you in this video. And it is a strategy. Like, that's just the way to do it because everybody has a different method and different strategy on how to do it and how to manage risk, what rules they're using, following every single day, and also what strategy to actually stay consistent following these rules. Because most people, let's be real, maybe yourself too, you can't seem to stick to your rules for a couple days, a couple weeks, a couple months. So how do you expect to see results if you can't stick to your rules and be consistent with your vision? Obviously, everybody's vision with trading is they want to make money doing this, right? And to make money doing this, and the best way that I was able to make money doing this, the amount of money that I've made, is with these three things primarily. But mostly, honestly, the biggest thing is consistency, bro. Consistency. All right. Not to sound cringy or anything, but this is gonna be a fairly short video, kind of. So make sure you stick till the end. If y'all do want some free value aside from this YouTube video, we do have a completely free Discord. I linked it in the description of this video. If you want to join that, we literally break down every single trade we take, win or loss, it doesn't matter, with a picture, detailed breakdown of every confluence we looked for, why we liked it and why we didn't like it, etc. Why we took it, a rating that we give it, talking about our mistakes, even when we make mistakes, bro. Everybody makes mistakes, okay? No one's a perfect trader. We break down everything in this Discord. We also trade live in it, so make sure you join. Link in the description. We're building a huge community on there of just traders that love trading. And we also have a free course that we made in-house for you. It's a good amount of content that if you're still on the basics, you can really use to get ahead. So other than that, let me go ahead and start breaking down what I'm talking about in this video primarily. But before I do so, let me drink some water. Drink some water with me, you feel me? Again, I'm in the car recording this so y'all can get some free sauce and just so I can get some more content on there for you guys. So biggest thing I want to touch on is rules. So the first thing I want to touch on, number one, rules. I'm going to break that down a little further. So what am I talking about when I talk about rules? Obviously, you're going to have rules about, obviously, once you have a entry model, stick to that. That's a rule. Sticking to your entry model checklist, okay? You want to stick to your entry model checklist, to entry model. You want to stick to your strategy, your actual entry model strategy every single day. If you don't have one, join the free Discord. I'll send you the one I use right now. Or you can ask the other guys that I trade with. It's not just me in the Discord. We have like 4 guys that actually run it and have different strategies. So pick and choose, make your own, do whatever works for you, back test it, make sure it actually works for you, and you like the way it works. So stick to an entry model, okay? Stick to an entry model. That's going to be your first rule to follow, okay? The second rule to follow is once you find that entry model, this is mainly for the high probability, longer entry models for a day trade, still talking about day trading. For example, for me, I trade typically from only about 10 a.m. until 11 a.m. So longest I'll really usually be in a trade average is maybe like 30 minutes. That's a long trade for me, okay? 30 minutes to an hour between there. I've had trades go on for 4 hours, but that's because price doesn't completely deliver or we get caught in some chop. But that's kind of where I'm talking about. But if you have one of these that takes maybe at least 30 minutes for a trade, you're not like scalping, then sticking to an entry model like that, a high probability entry model that you only tend to see once per day happen max usually, maybe 2 in a lucky day, but max 1 day. Some days it doesn't even happen, so you don't trade, is to only take 1 trade per day. This is super big, bro. Because once you start taking more than one trade per day, you're going to go on tilt. It's human nature, bro. Unless you have gone through years and years and years of pain and death in the trading industry, you are going to go on tilt if you lose your first trade, or even backwards tilt, bro, is what I'm going to call it. Because when you win your first trade, you're like inflated, dog. Let's say you win that first trade, hit a banger trade super clean, maybe go super fast, and you're inclined, bro, I'm about to make even more money. You start getting greedy. So that's exactly what you don't want to do. If you literally just block out in your mind that you're able to take more than one trade per day, bro, the benefits are going to be insane, okay? Just also, that's going to make it way easier to track your progress. If you're created a tracking sheet, it's going to make it way easier. If you are literally tracking all your trades, what you're doing every single day, if you have one result every single day and it's consistent, again, it's going to make it a lot easier for you. So biggest thing is these rules. We'll get into consistency in a second, but let me see. What the hell? Let me see. Another rule is going to be keeping consistent risk. Boys and girls, whatever. And I cannot stress this enough, bro. You may get lucky, right? Obviously, maybe it's good. If you're trading a prop firm account, sure, bro. If you want to milk that prop firm account, take the risk, take the gamble. Switch up your risk and size huge on a day where your nuts are telling you, bro, damn, I think I'm going to win today's trade. Why the hell do you think you're going to win the trade? You never know the outcome of a trade, so why are you changing your sizing based off of the itch between your crack, bro? Like, you shouldn't be doing that. You feel me? Keeping consistent risking consistently every single day. So let's say, for example, I always use the example that I personally use, which is if I'm trading on a 50K account, which I do, I risk less than, what was the less than sign? I risk less than 1% of that account, which is obviously less than $500 per trade. I actually end up risking $300 per trade. So if I lose, I'll lose about $300 per trade. Obviously, it's not going to be perfect every single time. Some days I'll lose like $360 if the fill is bad or the contract sizing is tough. Maybe I'll lose $340. Some days maybe I'll lose $275 or something like that. But the average, I want to get it to $300 where I set my stop loss and calculate my contracts, okay? So once you figure out your risk amount, again, it doesn't have to be the one I use, bro. Do whatever you want with your life. But this is just what I do. This is all my opinion. Once you do that, keep it consistent, bro, for that size account. If you're going to trade a 100K account, maybe you want to double it, obviously, because it's double the amount of capital. But again, if you were trading on actual real bread, real money, real account that it was yours, if you had your 50K that you were trading with, you would really never, unless you really don't care about losing all your bread, change up on your risk and double your risk on a random day just because you feel like you're going to win, right? Just think about that. If you double your risk on a day, so let's say normally I lose $300. I lose $300 one day. Tuesday I lose $300 again. I lose another $300 on Wednesday. I'm on a loss streak, damn. But guess what? I feel like I'm going to win on Thursday. I'm gonna triple my risk, bro. I'm gonna risk $900. That way, if I win on my 1 to 2R, I'm gonna make $1,800, putting me up on the week like crazy. I just lost $900 in one day. I just lost everything I've lost in the week again in one day. I just doubled my losses for the week in one day because of the itch between my crack, brother. I've seen this happen so much, bro. People post on Twitter and stuff like, oh, I just blew my account. Because I sized up when I shouldn't have. Brother, why are you sizing up? Nothing told you that you were going to win today more likely than you were going to win yesterday, okay? Every day is individual in terms of stats, okay? Every day is an individual day, okay? Obviously, when you put every single day together, you're going to get a win rate, etc. But just because you lost yesterday doesn't mean you're more likely to win today, okay? That's just not how it works. So get that false idea out of your head. Risk consistently. If you risk consistently, and you have a decent win rate, you can make bread doing this. It doesn't matter. Maybe you'll blow a funded account, but guess what? Eventually, you're going to start getting that consistent outcome, and you're going to start making some bread, okay? Yeah, that was pretty much the second thing I was going to talk about in this video, which is consistency. Now, it's not just about being consistent with risk. You got to be consistent with your strategy. You got to be consistent with the risk, the money that you're risking, obviously, and be consistent with how many trades you're taking. So all of these things need to be followed by consistency. And what does consistency mean? I've said that damn word so many times in this video, my tongue is about to fall off. Bro, just stick to it for a long period of time. What is a long period of time? Dude, do this for 3 to 6 months. Actually, trading, bro, 3 months is not enough. Do this for 6 months, bro. 6 months. Time will fly, and you'll feel like you haven't even traded that much, because you shouldn't be trading every day. You should be on the charts every day, sure, because we're looking for opportunities, right? And I'm not telling you what to do, but I'm telling you what my vision is, my view on this is. Stick to an entry model. Only take 1 trade per day. Manage your risk consistently, and then do all these things consistently for 6 months, and you're going to realize something. Maybe you won't become profitable, but you're going to realize why you're unprofitable. That's going to give you numbers. Also, consistently track all your info, please, because then if not, you're just going to waste all of this. All that data, bro, is worth so much. It can change your life. It's going to change my life. All right? I'm in the process of changing my life right now as I'm making this video. So if you want to follow my journey, make sure you subscribe and like this video. I'm not done yapping yet, though, so don't worry. Don't run away yet. But I'm going to change my life by doing what I'm saying in this video. Maybe y'all, if there's haters on this video, I don't give a shit, all right? I'm going to lock in 2 years from now, a year from now, 3 years from now, 5 years from now. Life is going to be different, bro. And if you want anything in your life to be different, this applies to literally anything. Consistency is key. And you got to be consistent in all the other aspects aside from just doing it. It's not about trading consistently. It's about how are you trading. Something that one of my teachers used to tell me is you get good at what you spend your time doing. So are you spending your time taking horrible trades? You're going to become a horrible trader. You're going to be really good at taking horrible trades. Okay? So do these things. The vision is whatever you want it to be. But how do you actually achieve that vision? Is through this consistency. You want to see, you want to get what you see, then develop a plan, a proper plan. Maybe it's not this one, but develop a proper plan for you to actually make bread, okay? Now, enough yapping, bro. I know y'all getting tired of that motivational shit. My bad. Let's get into basics of my entry model. Again, I'll break it down real quick. So basically what I look for is, number one, I'm going to put you on some game real quick before I dip. Number one, higher time frame bias. So I want to understand where the market is going for the day. So this is going to be done on the 4 hour primarily, or the 1 hour, okay? So the 4 hour, 1 hour, basically what I'll do, I'll go to the 4 hour like this. 4 hour. Oh my god, this market is so tragic. Delete all this. So obviously we go to the 4 hour, and the 4 hour allows me to tell where the next 4 hour candle is likely headed to once we make a retracement, right? So I'm going to look for, obviously in this market right here, we can see pretty much every day we're bearish. I mean, y'all have been seeing the market these days bearish, but if you go back here, obviously the trend is bullish. So in these retracements, I'm going to be looking for longs. So I'm waiting for a retracement on that higher time frame, which is the 4 hour or the 1 hour. And then I'm looking for a retracement, and then an entry down here, which I'll kind of break down a little bit in a second. And then where's that impulse gonna go? If we're in an uptrend, how do we stay in an uptrend? If we're in an uptrend, to stay in an uptrend, what do we need to do? We generate a new high, right? Let me draw it out here instead of in the air right here for y'all, making stuff up. So right here, let me zoom in for anybody that got glasses, you feel me? So boom, a high. We have a low. We have another high. And I'm using this example because I remember our team took a trade literally on this 4-hour candle right here, on the 10 a.m. So we have another higher low. This is an uptrend, right? We're going boom, 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 boom. If we're staying in an uptrend, which we are assuming because we're currently in one, we haven't shown any signs of not being in one because we're still respecting bullish structure. We have retraced here and now have started to impulse upwards. To maintain an uptrend, we need to put in a new high because that's the definition of an uptrend. New highs are being created after retracements, okay? So, what does that mean? These highs have to get taken out by at least a tick. It doesn't matter how much, but they got to get taken out. So what am I going to do? I'm going to target that exact high to the tick because I know if we're in an uptrend, we need to take that out first. And I don't want to set my targets way too high above that because I don't know how high we're going to get past it. I know if we're going to stay in an uptrend, though, we have to take out that high at least by a tick. So what am I going to look for next? Let me see, higher time frame bias. Retracement. A retracement on the higher time frame, and then a higher time frame FVG delivery. So what does that mean? Basically, in these pullbacks, typically in a pullback on the higher time frames, since the moves are usually cleaner than the lower time frame, again, typically, you want to mark out those fair value gaps. So a fair value gap, boom, right there to there. Obviously, a fair value gap is the distance between the previous candle's wick high, this is a bullish fair value gap, and the third candle's wick low, and the middle impulse candle. Bro, I keep saying that damn word. That sounds stupid, bro. Anyways, we push up. We're in an uptrend. We retrace into that gap, which is a high likely continuation zone where we retrace into, balance out the orders, whatever you want to call it. You're smart money people. And then we push back up. Now, what am I looking for here? Since it's a higher time frame gap, I'm going to be going down typically to the 5-minute time frame. I don't even think I can see it on here, honestly, because it won't let me go back because I don't pay for TradingView. I don't trade on TradingView. But yeah, it doesn't let me see it. But basically, I will look for structure to start building up to back to the upside on the lower time frames for me to actually take a trade. Oh, I'm going back. Oh yeah, there we go, boys. That's what I'm talking about. We made it. Alright, so I'm on the 5-minute time frame here. Let me show y'all what I'm talking about. This is the trade we took. Let me go here. The team took it. So, right at 10 a.m., and I've made a couple of videos about this, and it's becoming super popular right now. Basically, the PO3. So, every 4 hours a new candle opens, right? The first one's at 10 a.m. if you're on Eastern Time, New York session. 10 a.m., it opens. So, it goes until 2 p.m. And what do we know about candle anatomy? Candle anatomy tells us we must open. I'm going to draw it out actually for y'all. You feel me? Let me draw out a box. I'm going to draw out a candle here for you guys. So we make a candle, right? Let me draw it out up here. For a candle to happen, let's say it's a red candle. I don't know. We're going to be talking about a green candle. We're talking about a green candle, boys. Come on. Log in. So we have a green candle. So a green candle will open right here. If it is to be a green up close candle that we're expecting it to take out a high, which is what we're doing, we're expecting that 4 hour to take out that high in this situation. We're going to open here. After open, what do we expect? Price to dilly-dally a little bit, maybe, right? But eventually, we expect it to put in a nice little wick, a bottom wick, right? So we're going to open, we're going to form a low. Because most candles, obviously, end up creating wicks. So in the 4 hour, this is going to be a wick, but when we go to the lower time frame, it's going to be a downwards move. Obviously, typically it'll start breaking structure to the downside on the lower time frame, like the 5 minute, 4 minute, up to the 1 minute, and then we'll break structure back to the upside, and that's what we want to catch. That break structure to the upside is going to be when we create the wick. It won't be a red body anymore, and then it shifts back to a green candle, leaving that wick behind, and that's pretty much what these entries are going to be. And now we just eat up that whole move to the upside. We'll generate a top wick, obviously the highest that the candle goes, and then we'll finally close. That's how a candle works. We open, we form a low, we generate a high, and then we finally close, okay? So that's pretty much what you want to visualize in these types of trades, at least the ones that I've been taking. Again, we have people in the team that trade super differently, but if y'all want to join, link in the description. We have a ton of people in the free Discord if y'all just want to talk up and see what we're doing in there. Now, we also have a 7-day free trial, by the way, if you want to trade live with us, and we have multiple people that trade live. So if you hate the way I trade, bro, then we have other people in there, and you can ask questions and just trade live with us. That's in the free Discord too. Anyway, enough plug, and yeah. So what happens at 10 a.m.? 10 a.m. is right here. We get that dump. Bottom wicks created. Internal liquidity gets swept out. What do we see? We shift structure back to the upside. We get a change in the state of delivery on the 5 minute. Right there. Oh my gosh. And then what do we see? A long opportunity. As soon as we close up here, we closed above the last red candle that caused the last low, which is this one right here, causing a change in the state of delivery. Stops at the last lows. And then guess what, boys? Guess what, bro? Just eat. Just eat, bro. Just eat. Target opposing liquidity. These highs right here. And then that right there is like a 2.25 hour, dog. And the team caught that. And yeah, that's pretty much that. Dude, I dropped so much sauce in this video. It's actually crazy. If y'all like this video in any single way, shape, or form, please drop a like, drop a nice comment. A lot of people have been dropping nice comments. I post all of them on my Instagram story. So if you want to drop a nice comment, help the algorithm, join the free Discord. I dropped so much sauce in this video for free. And I kind of enjoy making these videos. Let me know in the comments also what you guys want to see a video on next, because it's kind of hard to come up with ideas. Because like I trade similarly every day. Again, consistency, boys. So it's kind of tough to come up with a lot of ideas. But I'm trying to post every single day for you guys so I can get as many people, build a huge, nice, free community so everybody can talk about trading and basically cross ideas between each other. And that's the best way to learn, in my opinion. So if y'all have any trading ideas, if y'all are killing it with trading, bro, let me know. Shoot me a DM on Discord or Instagram, whatever, what you're doing. And let's talk, bro. I love the trading people if you're cool. Other than that, boys, this is pretty much going to wrap up this video. A lot of yapping. I covered rules, sticking to rules, my trading entry model pretty much as you see it right here. This is a nice view of it if you want to back up and look at it. Wow, it's so pretty. And yeah, I'm in my car literally making this video right now for you guys. I don't know if y'all can tell. Yeah, I'm done yapping. I'll see y'all in the next video. Same name on Instagram if you want to follow me on Instagram. Make sure you join the free Discord. Comment and subscribe if this video helped out in any way. Thanks so much if you even made it this far in the video. You're crazy.